Hi, thanks for being here. This is Judy's Trading Notes. In this note, we will cover the market summary for January 29th, 2026. Let's start with the macro picture. The Fed has decided to keep interest rates unchanged. They are confident that inflation is cooling and the economy is expanding steadily, which continues to support market liquidity. However, there is some tension in D.C. as the January 30th government shutdown deadline approaches. With the spending bill currently stalled in Congress, gold prices are climbing as investors look for safety. In terms of individual stock focus, Tesla, with ticker TSLA, released its year-end 2025 quarterly earnings. Although EV revenue dropped 11% compared to last year, the energy storage business surged by 25%. Driven by the energy division's high margins and cost controls, the overall gross margin rose to 20.1%. Despite heavy investment in factory expansion, AI infrastructure, and robotaxis, full-year free cash flow still grew by 74%, indicating ample liquidity. Multiple business expansions are showing signs of transformation. The company expects to complete its investment in Musk's xAI this quarter, release the third-generation mass-producible version of the Optimus robot, and aggressively expand robotaxi service areas in the first half of the year. Also, Tesla will be ending its production of Model S and Model X vehicles next quarter and switching to producing humanoid robots. On the other hand, Microsoft, with ticker MSFT, released its year-end 2025 quarterly earnings. Its cloud business, Azure, grew by 39%, and operating margin reached 47.1%, higher than the 45.5% in the same period last year. The market remains concerned about whether capital expenditure is growing too fast and if profits can be sustained, as single-quarter capital expenditure hit $37.5 billion, nearly catching up to the quarter's net income. However, MSFT still expects Azure revenue to maintain 38% growth this quarter. Current capital expenditure expansion will proceed in alignment with lease order developments, posing no immediate expansion risk. Nevertheless, the market will continue to monitor whether operational and expansion opportunities and risks related to OpenAI and Oracle affect order realization, while also watching next week's Google earnings for further industry insights. In the short term, with the U.S. economy and labor market remaining robust, the Fed left interest rates unchanged, maintaining an expected accommodative outlook that is simultaneously supporting gold prices. As the market digests the rate decision, focus is expected to remain on earnings outlooks. Results so far from Microsoft, Tesla, and financials support a positive view, with optimism that expanding U.S. capital investment and manufacturing activity will underpin the economy and risk assets. Meanwhile, the market remains influenced by the looming Jan 30 government shutdown deadline. With gold prices staying strong, investors are watching to see if the U.S. dollar stabilizes. Thanks for your time with us. We will flip to the next page for Judy's Trading Notes soon.